Peloton making some major moves. Co-founder John Foley out as CEO, and Barry McCarthy, former Netflix and Spotify CFO, stepping in. CNBC correspondent Diana Olick joining me now. So, Diana, tell us about Barry McCarthy.
Well, Allison, like you said, he's a former CFO of Spotify and Netflix, and he's been on the boards of other social media as well as tech companies. Now, outgoing Peloton CEO John Foley called him today a visionary in the media software subscription business. He also noted that McCarthy and his wife are avid Peloton users, so they, quote, get the magic. Now, Foley has always seen Peloton as more of a media company, not a fitness company. And the background McCarthy has in music is also valuable, given Peloton's music platform for all of its many workouts. Allison?
Peloton also saying it's cutting about 2,800 jobs. That's around 20% of its corporate workforce. Tell us about those cuts.
Yeah, I mean, it had to happen. Look, Peloton was the ultimate stay-at-home pandemic play. It saw huge growth. Its stock soared, but that came crashing down last fall after the company reported slowing demand for its bikes and its treads, but it was still spending a lot of money. Then CNBC.com a couple of weeks ago reported that it might suspend production or potentially halt production of its bike and its treadmill. And that, of course, sent the stock even lower. And so it was just spending too much. And that's really what CEO John Foley admitted on a call with analysts this morning.
I love Peloton. I love the role we play in connecting the world through fitness. But we also acknowledge that we have made missteps along the way. To meet market demand, we scaled our operations too rapidly, and we overinvested in certain areas of our business. We own this. I own this. And we are holding ourselves accountable. That starts today.
So the layoffs were really because, they just overinvested in the company. They saw subscribers fall. They haven't actually seen them fall yet, but they've actually seen the growth shrink. So at the very height of the pandemic, you were seeing 25% growth in subscribers. And now the forecast is for about 2% growth by the end of this year. And, that's a big change. And it don't necessarily need a huge company to do that or a huge workforce. Allison.
So, Diana, how do these moves play into the rumors we were hearing yesterday that Amazon and Nike might be interested in buying the company?
Well, everybody's got an opinion on this. And if you listen to CNBC all day, you heard a lot of those opinions. So I would say the bulk of the analysts on our shows today said that the moves made today, the announcement, made that actually less likely. You've heard about Amazon, Apple, Nike, all of them potential buyers of Peloton. But they say bringing in this new CEO, he announced that he's moving from California to New York. So it means that he's in this for a little bit of time at least. And restructuring the whole business. Perhaps they make it, a more desirable company for investors, but perhaps they also help to raise the stock, which makes it a more expensive company. So, it remains to be seen what happens. But analysts today did say that they think all of these moves announced will make it less likely for a sale in the immediate future.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.